I have a filing to talk about from CBOE BZX. This is still 2021-086, and it's to amend the opening auction process. As always, can be found in the description if you want to read this filing yourself. This is SR CBOE BZX 2021-086. Notice the filing of a proposed rule change to amend the opening auction process provided under Rule 11.23b 2b. So the exchange proposes to amend Rule 11.23 B2B to make an opening auction process more dynamic by, under certain circumstances, delaying the opening auction in order to incorporate additional information into the determination of the opening auction price. Specifically, as proposed, the rule would provide that when there is no valid NBBO, which stands for National Best Bid and Offer, in a BZX listed security, and there is an indicative price that is not within the caller price range, the opening auction will be delayed until there is a valid NBBO or the delay period has lapsed as further described below. The exchange believes that this proposal will make the opening auction price in less liquid securities more representative of current market conditions, making the opening auction process more meaningful and a more meaningful price information event in such BZX listed securities. So Supernote 3 and 4, Supernote 4, indicative price shall mean the price at which the most shares from the auction book and the continuous book would match. Supernote 3 says a valid NBBO is where 1. There is a both national best bid and national best offer for the security. 2. The NBBO is not crossed. And 3. The midpoint of the NBBO is less than the maximum percentage away from both the NBB and the NBO. So the proposal, the exchange is proposing to amend its opening auction process such that rather than immediately forcing the opening auction to occur at either the lowest or highest end of the caller price range and canceling auction eligible orders that were willing to execute at the indicative price but outside of the caller price range, the system would instead wait for the first of a valid NBBO, the indicative price to be within the caller price range, or the passage of a certain amount of time before initiating the opening auction process as described in additional detail below. If there is no valid NBBO and the indicative price is within the caller price range, the opening auction price will be established pursuant to the standard opening process. That's if there's no valid NBBO. So proposed Rule 11.23 B2B 3 would delay and set forth an alternative opening auction process in the event there is no valid NBBO and the indicative price is not within the caller price range. The proposal is designed to prevent the cancellation of auction-eligible orders priced equally or more aggressively than the indicative price, which the exchange believes will facilitate the presence of sufficient liquidity and information to make the opening auction a meaningful price formation event in BZX-listed securities. So how this process works. So basically this rule would provide that the opening auction price will be delayed as set forth in these two paragraphs. Paragraph A, if after 1 second delay, there is a valid NBBO or the indicative price is within the caller price range, the opening auction price will be established pursuant to the standard process. If there is no valid NBBO and the indicative price is not within the caller price range after a 1 second delay, the opening auction will be delayed by 1 additional second, at which point if there is a valid NBBO or the indicative price is within the caller price range, the opening auction price will be established pursuant to the standard process. If after 1 second, there is a valid NBBO or the indicative price is not within the caller range, the process described in this paragraph will continue to be applied in 1 second increments until either the opening auction occurs or until 5 seconds have lapsed. For example, by 9:30:05. Now B, if the opening auction has not occurred by 9:30:05, the system will widen the caller price range in the direction of the auction imbalance by 5% of the final last sale eligible trade as of 9:30:05 a.m. If the indicative price is within the widened caller price range, the opening auction price will be established pursuant to the standard process. If the indicative price is not within the widened caller range, the opening auction will be further delayed as discussed below. So if it was going to be further delayed and it's not established by 9:34:30, then specifically this rule would provide that 1. The system will check to see whether the indicative price is inside the widened caller price range every second between 9:30:05 and 9:30:30 a.m. If an indicative price is inside the widened caller price range during a check, the opening auction price will be established pursuant to the standard process. If by 9:30:30 a.m. the indicative price is not within the widened caller range, the caller price range will again widen by the widening amount. The system will check to see whether the indicative price is inside the collar price range every second between 9:30:30 and 9:31:30, a full minute, basically. Now, if an indicative price is inside the widened collar price range during a check, the opening auction price will be established pursuant to the standard process. If by 9:31:30 the indicative price is not within the widened collar price, the system will check to see whether the indicative price is inside the widened collar price every second between 9:31:30 and 9:34:30, 3 minutes. If an indicative price is inside the widened collar price range during a check, the opening auction price will be established in the standard way. Unless the opening auction has occurred, the collar price range will widen in the direction of the imbalance again by the widening amount each minute from 9:31:30 to 9:34:30. If no opening auction has occurred by 9:34:30, the opening auction will occur pursuant to the standard process using the expanded collar price range. So basically, what they're doing is they're widening up the opening process to make it more meaningful. I know a lot of members have been waking up to the opening bell, and their calls and puts are like all over the place as far as profit. This could be a reason why. We're in a liquid stock, so this could be a reason. So pay attention to this one. CBOE is a big options exchange. So basically, if it doesn't hit the the opening auction doesn't have the correct NBBO price, then it will be established. If there is one, but it's not inside the collar range, then it's going to widen out the time frame in increments of 1 second until it gets to 9:30:30, and then at that point it goes by minute, 3 minute, and then it's widen out that range to make it more meaningful process. So in essence, the exchange believes that the proposed changes will improve the price discovery process in the opening auction for securities listed on the exchange, along with additional benefits, which are: first, the exchange believes the proposed rule will contribute to the protection of investors and the public interest by memorializing the circumstances under which the exchange will continue to operate the opening auction in the same way that it does today. The exchange notes that the concept of delaying an auction and widening the collar price range is similar to the 12th Amendment of the plan to address extraordinary market volatility. Lastly, the exchange believes that the proposed approach would maximize the execution of auction-eligible orders priced equally or more aggressive than the indicative price of the security. So there you have it.